Well, hi, everyone, and welcome to your Daily Five. I'm Leslie Jouflas of Trading Live Online. I think it's been a little while since I've done a segment for your Daily Five, so I'm glad to be back. And today I would like to go over the indexes, the Dow Jones, the Nasdaq, and the S&P 500. We'll look at a couple of different time frames. Sometimes when I'm getting ready to do a segment for your Daily Five, I'll notice something specific that looks like it's going to take place fairly soon. Sometimes it occurs before the video even gets up. I'm always hoping that it can just wait until the price action can wait until the video gets up, but it's not always possible. So today I'm looking at things that are saying that the price is likely to start a move in one direction or the other, kind of more of an extended move. We've had some chopping back and forth. So let's take a look at some charts and see the levels that you want to be watching. Okay, the first thing that we're going to take a look at is this monthly chart of the S&P 500. This is a futures chart. You can use the SPY if you like. It'll be very, very similar to this. But I think the thing that we first want to look at with this monthly chart is, where is the S&P? Well, the S&P made a bottom back here in October of 2022. It had this extended sideways range, even though it made a low here. Look at all of the candles that were testing around this horizontal line right here. How the price kept coming back up there, closing around it, opening around it, retesting it, and then finally got a breakout to the upside. Right here is what we call a throwback. So when you have a breakout of some sort of a coiling formation and the price tests back to it, that's known as a throwback. If it's a breakout to the downside and the price tests back up, then that's known as a pullback. So there was a successful throwback getting in towards the fall of 2023, and then very strong bar to the upside, followed by another strong bar that closed the year. So this month so far, January 2024, the market has just been sort of moving back and forth. But let's take a look at a couple of things. First of all, back here, there was an inverse head and shoulder pattern. Some of you might remember that from a video that I did at least a couple of months ago, where I said this is really the pattern you should be watching. And there was a lot of bearishness at the time, and that's typical when markets are doing, back and forth movement. We always try and form opinions about where the market's going. But that's why I like using price patterns, because the price patterns, when they do breakouts and they're successful breakouts, they can give you direction. Sometimes they can give you price targets. Well, this is the price target. This is the measured move that's just taking the approximate height of the pattern, projecting it from the breakout point. So I would say that the price really has achieved that objective. But what I'm seeing, if we take this one away, is possibly there is another larger inverse head and shoulder pattern. And that would be this structure here. So this would be this dip down, retracement up, market makes another low, another move to the upside, and a potential right shoulder. So this is a potential pattern because head and shoulder patterns are only validated when the price moves through and stays above that neckline. So this would be the neckline here. There's been a little bit of a move up, but the price is still hanging on there. Now, price can always come back in and do some more testing to the downside. But this level right here, this is where we don't want to see price trade below at this point. That would be negative for a number of reasons. One, because of the tremendous amount of testing that the price action did around that price level. The second reason is because that was the throwback area for this inverse head and shoulder pattern. And so a lot of support there. And the third reason is this long candle. This is a very bullish Japanese candle. And if that low is taken out along with this support, that would be very negative for the market. But keep in mind that the market can still do some more testing. This pattern would still be intact, most likely, but we want to start seeing some closes above this last high. So that's 48, 41 and a half. All right, now we have an overall picture of the market structure. We have one important area right here. We don't want to see price go through. That would most likely, in my opinion, be a very bearish indication for the overall market. Head and shoulder patterns, inverse or topping, are only validated with breaks of the neckline. Now, I'm not sure I would really say this is a real break yet of the neckline. It really hasn't gone anywhere. Notice how back here, and not really a break, not really a break. This is a break of that neckline. So let's keep that in mind. We want to see some more up in order to validate that pattern. Now, if that pattern is validated, then we can do a measured move all the way from the low there. And you guys should probably do this on your own charts. This is sort of a, measure once or measure twice, trade once sort of scenario. And then we can project that to the upside from wherever the breakout might be. So that would be quite an extended move to the upside. But keep in mind, when this pattern was validated, it was hard to believe at that time. That was way back here. That was in about the middle of 2023. It was very difficult for traders to believe that the market, especially after this move down, could get back up to those highs and make new highs. So we never know what price is going to do. All we really can do is follow the patterns and the price action with them. Okay, so now we're scaling down from the monthly chart. I'm going to come down to this daily chart now so we can kind of give a little bit more of a bird's eye perspective from that monthly chart. So I just have some levels that were marked off here as resistance. Back here were the 2021 into the 2022 highs. The correction, this is where that inverse head and shoulder pattern was. And this would be on the larger pattern, the monthly chart, the left shoulder, the right shoulder over here. Now here's a measured move here where the market had made kind of a head and shoulder type of pattern, and we could take the height of that pattern and project it to the downside. And that's just about where the price got to. Now, there's no guarantee if there is a break of a head and shoulder pattern, there's no guarantee that the price will get to the measured move. Sometimes they'll get a portion of it. That's all you get. Sometimes they'll get to that move and then keep moving beyond it. So again, we have to monitor price action when we're using patterns and measured moves. So after that completed, there was sort of an extended A, B, C, D pattern. Those are harmonic patterns that I use quite frequently, and that's how that measured out. Then the market can see where it retested that throwback area and where the market started to climb up, broke through this level here. So if we look back here, we use that horizontal red line, we can see how the market is just now clustering around those previous highs. It's really trying to decide, do I want to continue up or do I want to maybe test down a bit lower? So with this chart, we can see a little more detail on where some support areas might come if the market does move down. And remember, there are specific places that we don't want to see the market trade below. One of them is this low here. That's the low from the monthly candle that I just showed you a couple of minutes ago. But it can get a retracement back down, retest this trend line area. There's a little gap area there, a little bit of clustering. So there's a number of places where the market can come and test and still remain bullish. So here's an area I'm marking as would be bearish below that level. Definitely below these lows here, but we might get some more testing back and forth. All right, with that in mind, let's take a look at one more S&P chart. Okay, now I've scaled down to a 60-minute S&P chart, again on the futures. And here we can see some detail of a range. So we just looked when we scaled down to the daily, and we could see that the market is testing up around those previous all-time highs. It did trade above those all-time highs, but look what it's done. It's come back down and back up and back down and back up. So we're in a trading range right now. This in what's called an internal trend line or a center trend line, you can see that the price is testing around that price level quite a bit. We can easily see that on this chart. And today the price came down to it, and it kind of rallied off of it towards the close today. Well, I've also been watching the relative strength indicator, the RSI, and I've got a little bit of a resistance line uh, marked in here with this dashed line. So if the market breaks above here, remember, we're going to be breaking to new highs. And remember our monthly pattern that we're looking at, we want to be able to see some momentum if the price breaks above here. So the RSI should, which can be a four-letter word in trading, should be able to move up and make some momentum highs with the price if that occurs. If the price breaks out here and we're not seeing momentum highs on any of our indicators that we can use for momentum, the MACD, we can use the RSI, some other the stochastic and other indicators for that. So let's make sure that if we see a breakout to the upside, we're seeing signs that there is some underlying power behind it for a good breakout. Now, this also is looking like a potential inverse head and shoulder to me, with kind of a left shoulder here, head of the pattern, and this area forming the right shoulder. So again, what would negate that is price not breaking out, but coming down and breaking these lows. If it breaks these lows, then I think we can take this as a range and again do another measured move down, which would bring it back around into that gap area, which we'd want to be able to monitor that price action to see if it's able to hold as support, possibly giving a buying opportunity. All right, so we've looked at the S&P 500. We've looked at, some scenarios upside. We've looked at some areas to the downside. Let's take a quick look now at the Dow Jones and also at the Nasdaq and see how they compare with the S&P. Okay, so I'm going to use the YM. This is the Dow Jones Emini contract, and it's on the weekly chart. So notice how these are the all-time highs, the previous over here, and notice how the Dow has been holding above them. So it has been a bit stronger than the S&P. The S&P, remember, is just sort of still floundering around back here, trying to decide where it wants to go. Here's the RSI that pushed up to a momentum high. The MACD pushed up to a momentum high. So if on the S&P we start to see some kind of back and forth to the downside, maybe down towards those support, but the Dow can also be testing back down like a throwback back around this previous level, maybe even a little bit lower. this trend line break here, that was a bullish signal for the market. There is this 127 Fibonacci ratio extension. However, I'd like to caution traders that whenever a market is at new highs, new all-time highs, it's never been there before, I wouldn't really just count on that as being resistance. What I do is just monitor it. Let's see how price acts around that level. It may just blow right through it and keep going. It might get a little bit of some resistance there, but it's just there is no previous resistance. So we don't want to just count on that as a level for the market to turn from. If it gives us signs that it does that, then that's fine. But let's wait and let the price tell us what it's going to do. All right, so with a look at the Dow Jones using the YM contract, let's take a look at Nasdaq now. Okay, so this is the Nasdaq on the Nasdaq futures on a weekly chart. So comparing it to the S&P and to the Dow Jones. So if we look at that horizontal line, which is coming across from the all-time highs from 2021, early 2022, the Nasdaq is closed a little bit above it, but it's below where the Dow Jones is. The Dow Jones has made more progress to the upside than the Nasdaq. However, this move from the low to high on the Nasdaq has been a pretty strong move. So here's we want to see this hold above. So if the S&P and the Nasdaq both break above and trade above, we have that range. Remember, on the S&P, if we see a breakout to the upside, we want to see the Nasdaq be able to clear this high and make progress to the upside. We want to see the Dow Jones clearing its recent high and making more progress to the upside, and same with the S&P. So the S&P right now is a little bit behind both the Dow Jones and the Nasdaq because it's not even really, it's not having as much of a close above this previous level as the Nasdaq is. So if I look at the RSI right back here, it's made a slight divergence from that high. However, this pullback is still in a bullish range. So it's not necessarily extremely bearish, I don't think, yet on that divergence. If this were to come down and start breaking lows, I would change my opinion on that. But if we look at the MACD made a, pretty good momentum high, and it's just been correcting to the downside as the Nasdaq has also been making this back and forth range. I just added one more indicator on here, and this is the on balance volume. Now, on balance volume is not bounded like RSI or MACD. So RSI tends to trade between 2025, 75, 0 to 100. And same, the MACD also has a bounded range. Well, the on balance volume is unbounded. It has no ranges. It's really directional. So if the on balance volume is still moving up, then we still have positive volume coming into the market. And the fact that the on balance volume is just slightly going sideways with this movement, I would take that as a bullish indication unless we were to see something very dramatic to the downside. But for now, this is looking bullish. The MACD was very bullish with this move up, and now it's just correcting down a bit as the price goes sideways. Same thing with the S&P. You can see that, there is room for some retracement and testing to the downside. This is the level that would be an important low to keep. So I'm going to be keeping an eye particularly on that S&P 500 range over the next couple of days and watching for a breakout in either direction. I hope you found this helpful. I hope your new year has been going well, and I wish everybody much success and happiness in 2024. Again, this is Leslie Jouflas with Trading Live Online, and thank you very much for watching your Daily 5, and I'll see you on another segment soon.